you probably wouldn't even see the significance of it.
The government came out and said this grant is only going to affect the market by 0.5%.
Targeting locations that still have that owner-occupier appeal, I think, is probably the number one factor.
Hey Ali, how's it going today, mate? Hope you're well.
Yeah, I'm good, Roy. How are you?
Yeah, not too bad, mate. Not too bad. It's getting a little bit chilly in Melbourne, so I've got the long sleeves on and getting ready for winter.
Yeah, awesome. I can imagine.
How's the day going so far?
Yeah, good. Busy. Just good, but always have time for you.
Oh, thanks for that. I appreciate it. Hey, I figured, you know what, before we get into talking about today's topic, which by the way is going to be about the first home owner scheme and how we are some of the, I suppose, impact it's had on the market from our end, what we're noticing. I figured I'd ask an interesting question. What's been the highlight of your week so far on a personal level and on a professional level at work?
Oof, that's good.
Yeah.
Personally, I think, well, you know, you probably know, but you know, we've got still, you know, going through Ramadan now, and I think from a personal note, what's probably good for me is that I've kept up training, running, and still kind of hitting those goals, even still, you know, while doing Ramadan, and that's probably doing more of that after hours. So I'm happy with that, I guess, from a personal point of view.
I remember talking to you about it at the beginning of the month, and I said, hey, you mentioned that you had a goal to be able to run 100 kilometers in a day, yeah? And I've been training recently as well, and I started to appreciate the importance of nutrition when you're training. And when Ramadan kicked in, I was like, oh, how is he going to run every day? Yeah. So,
Oh man, I'll tell you now, it's definitely not every day. I've definitely slacked off a bit, but you know, still kind of making it a bit of a priority. It's just something that, you know, I guess accepting the fact that it may go down a little bit, but just making sure that you're maintaining it. So when it does finish, and you know, I get to get those mornings back and able to drink water and so on, then going to be able to kind of, you know, get straight back into it or not lose so much momentum.
yeah.
But no, exciting, mate. And mate, from a professional note, I think, you know, we always, you know, talk about real estate, and we always talk about, you know, the kind of the things that we tell our clients that we are going to be expecting. But I think sometimes just seeing some of the numbers is always usually a highlight. So, you know, this week, you know, I've been reminded of this today, for example. I've been reminded on just a bunch of properties that we bought back in kind of 2023, 2024, back in Southeast Queensland. At the time, you know, it was interesting. It was coming off a little bit of we came off a bit of a high note in Queensland, Southeast Queensland, and then we started to see, I guess, the market. I think it was back when, you know, 𝗳�59 wanted to come out with, you know, the land tax and taxing investors on owning multiple properties, and we saw a little bit of a lull. And I remember just kind of telling people that, you know, these are just the things that they're proposing. And, you know, we were buying, and then ended up looking at some of the properties. And remember, we probably bought close to around 10 properties in a very isolated location in Southeast Queensland. And, man, we were buying those properties for $700,000. And today, they're getting released at around 1.2. So
Beautiful.
that's just, yeah, it's awesome seeing that. To be fair, a lot of those people that got into them, very interesting. It was all a lot of friends and family kind of got into that. A lot of younger clients that were like in their early 20s, they got into stuff like that. So just seeing that give them a massive head start was awesome.
I remember a lot of conversations and chatter about the land tax at the time. And I remember, like today, when everyone's talking about the CGT and the schemes and so forth, I remember we didn't even talk about it with anyone. We didn't talk to clients about how it can affect them. We just ignored it. It wasn't even on our radar. I remember that very vividly because it was just noise. Like you said, it was just a proposal, and it just never made sense. So we didn't even bother. Didn't really even pay attention to it as much as other people have. And I'm glad we did it, to be fair, obviously. Okay, so today we're going to talk about the first home buyer scheme and the new cap that was introduced at the beginning of October. I'm personally benefiting from the grant because I've noticed some of my properties that are in those price points are growing aggressively. Now, interestingly, the government came out and said that this grant is only going to affect the market by 0.5%, which I find very, very, very hard to believe. I don't understand how they came up with this figure. So let's just talk about the scheme in general. If you can talk to us about how a bit of a history or backstory about the scheme since it was introduced, and what our research division has identified in the property market as the effects of that scheme on the property market as it changed since it was introduced. So it'd be awesome to kind of share a few graphs with our listeners, and then maybe we can take it from there.
Yeah, for sure. So obviously the team's gone back into the lab and looked at some numbers and created some, I guess, good graphs that we can look at today. But really, guys, to touch on this, I guess for all the people listening, we've kind of recorded this podcast now in early March. We have just been super busy with, I guess, running our buyers agency business that we haven't been able to kind of share. But our shares, our thoughts are very similar to what we kind of thoughts are similar today that we had before, right? We knew that it wasn't going to be the case. I remember talking to friends, the team at Buyers Club, and just people in general, and saying, in my opinion, this is probably going to be one of the biggest knock-on effects for property prices in Australia moving forward. Because this grant, which we'll talk about, was probably the grant that was most freely accessible to so many people, right? Things like the purchase prices and the price caps actually increased significantly, more than what we've seen prior. There was no restriction on how many people were able to access these grants. So seeing those two things, plus what we currently saw in the market, given the current supply levels and just the demand that we were seeing across the board, I knew that this was only going to add fuel to the fire in some regions, and we've seen it happen, and it's a lot more than 0.05%, right? So let's talk about what, I guess, the grant actually means, right? The government's gone in there and said, for first home owners, if it's an owner-occupied property, so you're planning to live in the property, then you're able to buy the property with a 5% deposit, no stamp duty, etc. Okay, now what that means is it allows more people to have more access, right, with having less of a deposit, have access to properties that they wouldn't have access to previously. Okay, so somebody now with the $50,000 deposit technically could go out there and buy $1 million property. You know, if, for example, if this was without the grant, then that kind of $1 million property, give or take, would, you know, utilize at least $90,000, or a standard 10% deposit with LMI would use, you know, $130,000, $140,000, $150,000, you know, depending on stamp duty, etc. Right? And what it's allowed is that those people can go into the market. So is it giving people more opportunity, or giving people an opportunity to get into the market? Absolutely. However, it's like talking about, you know, it's like anything. It's like putting a Band-Aid on a wound. You know, you need to let it heal. You need to figure out, you know, what was the reason that caused it in the first place. Otherwise, this wound is just going to continue to open up later down the line. And what I mean by that is that you may allow some people to get into the market in the short term, but in the medium to long term, the next 12, 18, 36 months, it's going to be very, very hard for first home buyers to get into the market, right? Simply that way. Reason for that is because prices have been pushed due to these grants. Okay, and so just, I guess, touching on the first graph here, where we talk about Australia's average property price, and we've gone through back to 2020 when this first scheme was launched, right? And we saw prices on average price points around that kind of 700,000 from 2020 to roughly 2021 grow to over 800,000. So we saw, again, we're talking another 20% capital growth in these markets. And then in 2021, we saw price caps increase, right? And we saw prices from roughly 830,000 jump to around 900 grand. Again, that's another 12% increase in price.
Yeah.
And then from 2022, the expansion to an additional 35,000 people, right, that were able to access the grants, because the grant in 2021 was limited to a certain amount of people. Okay, we saw again price rises from that 900,000 up towards the over $1 million mark, right? But something that we did not see in any of these gaps was how far the price cap how far they got pushed up, but then also allowing them to be freely accessible to as many people as possible. And that's where we've seen markets really perform and really show strong signs of capital growth. I know speaking to agents, even developers, and they're telling us that anything below that kind of price point has just put pressure on the market.
Yeah.
And those properties have been sold quite fast over time, but also we're starting to see these people that, like investors, like our clients, take advantage of buying in these markets because they know that it's becoming a highly sought after for a lot of first home buyers and a lot of first time purchasers.
Yeah. And the rents, and interesting, it didn't have much of an effect on the rentals because the rents just continued to climb. Although there were more first home buyers coming into the market, rents just continued to grow, a business as usual kind of situation.
Correct. Because again, we've always touched on the supply and the demand factor, which is really realistically the major problem. Again, the government is putting a little band-aid on this. All essentially, I believe that they're doing is winning a bit of votes, for the next election, right? That's essentially what they're doing, right? Because they're the people that created these grants and have helped certain people get into the market. But when you think of it, what is it going to look like for the younger generation in 2-3 years' time, right? Once these properties or these grants have reached their kind of cap, and it creates new standards for benchmarking in pricing, right? These new standards become $1.5 million in Sydney, $1 million in Brisbane, right? And when we look at prices today, we have reduced the amount of LGAs, right, that actually have, or LGAs that are priced under these caps in a lot of these markets, right?
So for anyone who doesn't know, the caps I'll share the caps. So in New South Wales, it's 1.5. In regional New South Wales, it's 800. Victoria, it's 950. Regional Victoria is 650. Brisbane is $1 million. Regional Queensland is 700. Perth is 850. WA is 600. South Australia 900. Regional South Australia is 500. ACT Canberra is $1 million. But what's interesting is the jumps. For example, New South Wales, the cap jumped from 900,000 to 1.5. It's like they've introduced a new floor, a new baseline for the property market in certain states. But this jump, the way I read it is, you've completely miscalculated the market when you introduced the caps, the previous caps. Because how can you go from 900 to 1.5? You've got it so wrong first time around that you felt the need to almost double the cap. So it just makes me wonder, what else are they getting wrong? That's why I really don't believe that it's only going to have a 0.5% effect on the market, right?
Yeah.
And so it was brought forward 1st of October. We're in March now. What have you seen, Ali, happen in the marketplace since it was brought forward?
So we've seen major pressure on the markets that just below the caps, right, in these major capital cities, right? So, for example, we saw, Brisbane or areas like, North Brisbane, 20 kilometers out, they were priced around that kind of 850, 900 grand mark, have just been in super high demand, highly sought after owner occupied locations, right? People feeling like they're going to miss the boat. So we've seen markets in 3 to 6 months jump, 10, sometimes up to 15% in those markets. And those markets are just being in such high demand. We're also seeing, people restrict supply to the market. So those that, were on the market for 800, 850, even withdraw their listings and then put them back up, right, at higher offers. But one thing obviously to consider as well is what I have seen is that for a lot of people that think that it's just going to affect only the properties that are below that price, I also feel like it's making a major impact on properties that are just above that price. And the reason that I say it is using a specific example we look at Sydney. Locations if we would pick in two specific locations that a lot of our Sydney listeners will be familiar with, areas like Guildford, right? Which, before the grant was sitting around that kind of, 1.1, 1.2, 1.25 kind of mark. And then locations like Bexley, right? And Bexley was sitting around that kind of 1.5, 1.6 mark, right? But what we had seen is, due to these grants, we saw locations like Guildford, like Campbelltown, like areas in Liverpool, right, were seen a little bit more affordable, push up significantly. So we saw 1.2, 1.3 properties go to 1.45, 1.5 and just below the threshold because there was enough demand and people were willing to buy properties just below the threshold to enable for them to access those grants. But what we also started to see is a bit of a rollover effect or a domino effect. Is that we saw those prices tip towards that 1.4, 1.5 mark. Now, ultimately, if you're a potential buyer, prospective buyer, and you're seeing these markets at 1.45, 1.5, and that is the new norm, then you're essentially, your demand is going to shift into locations that are closer into the city, and more highly sought after, maybe potentially better schools, better lifestyle choices. And people have moved to locations like Bexley, which, you've got the airport, you've got the beach, 20 minutes away, you've got the city, 20 minutes away, etc. They were priced around that 1.6 kind of mark, now again be more highly sought after, right? Because when you look at a price comparison, well, people buy properties equivalent to what other locations are selling for. So these areas didn't change. There wasn't a new hospital that got created or anything, but it was just simply a price momentum shift, right? It has rippled across different locations. Now, usually, interestingly, we would see ripple effects occur from more expensive locations and push prices further out, right, into the more affordable regions. However, due to the fact that we saw more affordable regions, because underneath that price cap, have strong capital growth, it's actually done the reverse effect. It's actually increased the value of the more expensive suburbs. Now, when we say more expensive suburbs, the government's got it very wrong by just saying that it's only going to increase by 0.5%, right? That does not make any sense. Now, it's like, for example, I go home and I go to the beach and then I get a bucket of water and I throw it in the beach, right? You're not going to see massive change. No one's really going to think that there's going to be, they can't really see an effect of, has the water kind of increased. But let's just say, for example, I had, a small bathtub, for example, and I filled up a big bucket of water and I threw that bucket of water into that tub. You will see that tub, you will see the water increase. Yeah. You will see that water rise. You may even see that water kind of splash around everywhere, right? That's exactly what we're seeing. We're not going to see major price lifts in markets where average price points, in Toorak, in Victoria are $5 million. We're not going to see much of a muchness there, right? It's not going to do what, it might do 0%, right? It might do 0.05%. That's probably more natural growth, if anything. But in a market where you're buying a property that's $600,000, right, and the price cap is 750, and we see easily we're going to see people push up prices, in which we have to 650, 700,000. That can lead to a 10 to 20% price growth, right? And again, it's a $100,000 price growth. In some cases, right, if that occurred to a $5 million property in Toorak, you probably wouldn't even see the significance of it.
No.
But when you see, and what we've seen is those $600,000 properties go to $700,000. And when we look at reporting, we are seeing the lower quartile of properties. So the cheapest 25% of total values in Australia, which is usually between obviously zero, nothing's for zero, but zero to around 600,000. We've seen those markets have the most significant capital growth.
So, as you know, we work with investors. If I'm an investor today and I want to position myself on the front foot in the best market for me to take advantage from capital growth and leverage those schemes to my advantage, let's talk about the type of property that we should technically be targeting and the sweet price point. And maybe let's just take an example, Queensland as the state that we are considering. What type of product should we be buying, and then what kind of price point is the sweet spot?
Yeah, I think, targeting locations that still have that owner-occupier appeal, I think is probably the number one factor, because that is it will be a long-term play. Focusing on properties, I would say between that kind of 750 and 850K price point is also probably the markets that I would be focusing on. In saying that, I wouldn't completely reject going a little bit above the price cap, but in those more inner city locations, right? North Brisbane, there's a lot happening there. A lot of people, accepting the fact that these prices are above these prices. And again, the reason I say that is if you're a little bit above that, once we start to see those lower price properties move up, we're going to see a lot of value in those more premium location. And just given the fact that those areas have relatively less supply, because they're a lot more landlocked, they may also see very strong capital growth. But of course, buying as an investment depends on your strategy. If you need to balance your yield with your price point, then I would be focusing around that 750 to 850 mark. Locations in Southeast Queensland predominantly, I would say there's still locations in Logan. You can find properties at that price point. Ipswich, and one specific market that we've been focusing on is that kind of Ipswich Toowoomba region. Right, there's quite a lot of infrastructure happening around that area. It's still relatively affordable. People want to be able to feel like they can commute to, different kind of CBDs in a sense. And overall, you're still relatively close to Brisbane as well. Gearing up for the Olympic Games, I think that's probably where I would be parking my money if I was, say, a Brisbane investor.
Beautiful, good stuff. I'm listening to you talk, and I'm just thinking like there's a lot of different factors pulling at the property market this year in 2026. Yeah, you've got interest rates have lifted at the beginning of the year a little bit. You've got talks about the CGT changes, may or may not happen. We'll see. We've got the first home owner cap that's just slowly saturating in the market. We're slowly starting to see its effects. And then we've got the APRA debt to income ratio limitations that have kicked in February, right? So there's a lot of different factors that are pulling at this market today. One thing that I would love to share with our listeners, just a piece of advice, is figure out your strategy. Figure out what works for you, what you can comfortably afford today and in the future, and just buy, not necessarily just focus on capital growth, buy a good quality investment property that you can afford, and then let the market do its thing for you. We know we have a chronic undersupply of properties across the country. We probably need another 200, 300,000 houses to house the population, the additional population that we brought in. So there's just not enough properties. Just be careful not to get FOMO in a situation where you're just overcapitalizing on the investment property, and make sure you have the right team on your side at the end of the day as well. Okay, lots of noise. Make sure you just have the right plan, and you'll be able to cut through the noise and find success at the end of the day. Okay, that's pretty much it from my end today, Ali. Nice and sweet. It's a heavy subject talking about the first home owner scheme. Very technical. We have the report. If anyone would love to get a copy of the report, it's quite extensive. I think the research team has done a very good job. So we'd love to share it with you. Make sure you just drop a comment or send us an email. We'll happily share it with you. It's available for everyone. We're not gatekeeping any information. That's our promise to you guys. It's like we want to share, we want to educate, and we want to help as many people as we can. And this platform allows us to do so at scale. Before we wrap it up, Ali, do you want to say anything else?
No, I think you touched a lot on it, Roy. I think what you said probably speaks volumes, right? Get your strategy right. There's a lot of, I guess, spruikers, right? Just always saying to buy in a specific location and it's going to go up. But, without the right strategy and without taking a bit of time and making sure you're not purchasing properties just on the whim, right? Or because you feel like you are going to miss out, is probably some of the best advice you'll get.
Beautiful. All right. Thank you so much for watching. We'll catch you in the next episode. Cheers.
Thank you, guys. Thank you.